This is Roger Conrad. I'm editor of Utility Forecaster. What I want to talk about today is a seasonal trend that appears to be helping out our utilities. We wrote about it in the October issue, actually recommended a potential trade for those that are a little more adventurous, and that is to buy the ProShares Ultra Utilities Fund with the idea of selling it as we ring in Old Lang Syne. Utilities tend to benefit from fourth quarter trends. I think this year certainly appears to be shaping up that way. We've seen some of the major averages really take off here. That means, again, prices head higher. And with the ProShares Ultra Short Fund, you can basically double any gain on the Dow utility average. Conversely, we're also recommending a trade or a swap rather in January to the ProShares Ultra Short Utilities Fund. Utilities tend to do pretty poorly in January and February, and so therefore by investing in a fund that actually rises 2 percentage points for every percentage point the Dow Utilities falls, you can realize some income that way. It's also a pretty decent hedge for utility loaded portfolios. Why do utilities do well in the fourth quarter and poorly in the first? Well, they do well in the fourth quarter, I think, for one big reason is that you see a lot of portfolio adjustments at the end of the year as portfolios, and particularly institutions, want to lock in gains they've made during the rest of the year. So they tend to come out of other things and come into income generating types of investments. That was definitely the case last year, which was a recovery year starting in March 2009. Looks like this year is more or less shaping up the same way. So this looks like a pretty good trade. Utilities tend to sell off in January and February because investors, particularly, again, the institutions that really dominate trading, come out of utilities and into more growth-oriented investments. So by the time you get to March, that effect is pretty much done. But again, it's worked consistently over the years, this little seasonal trade. Now, what does that mean for the rest of us who don't really want to make that type of trading investment? Well, it also does have implications for long-term investors building portfolios. Ironically, the fourth quarter, which is good for utility stock prices, it's a great time to be in utility stocks, but it's actually not the greatest time to be loading up your portfolio. So I do have a number of companies, as you can see in the October issue, that trade below their buy targets now. Those are fine. The stock spotlights, those are fine buys. But anything trading above its buy target, don't chase it. Let's see what happens as the year plays out. Of course, even this year can have plenty more ups and downs ahead. October is a very weird month in the stock market, and this year is shaped up to be one of the stranger years in memory with the very strong September. So anything can certainly happen, and of course this is a fear-laced market where people are, and particularly institutions, again, are afraid of being left out of rallies, but mainly afraid of being in the market should we see another 2008 debacle. So it doesn't take a lot to set off a selling spree. We've seen it happen on individual days, but the bottom line is that if you don't see a good price for a company now, for a stock you want to own now, odds are you're going to see that down the road. If we don't see it in the fourth quarter, probably going to see it in the first quarter. Of course, an alternative to this type of investing would be just simply to buy incrementally. Buy some of your investment now, say a third of it, buy another third in a month, maybe another third at the beginning of the year, and thereby eliminate some of the up and down risk here. But I think, again, you can use seasonal utility trends to your advantage and get in the better prices. And the lower prices you get, the better yield you're going to get. So that's all I have to say today. Again, things seem to be working very well. We're getting into third quarter earnings in the next few weeks. We'll be reporting on those in Utility and Income, and Utility Forecaster Weekly, the weekly hotline to the letter. We'll have a major review, some in the November issue, a bigger one in the December issue, and I'm looking forward to some good numbers. I think all of our companies seem to perform well through the quarter. We had some good regulatory decisions. We had some investments coming into fruition and begin generating cash flow. We've had a number of very, very low-cost financings. All these things are going to help out, even with the economy somewhat moving along slowly but surely. So No reason to do anything but stay the course here. Look for bargains when prices appear. Thanks for tuning in. I look forward to chatting with you next time.